Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Richard Court of Octopus Ventures to talk about Octopus Apollo VCT. So Richard, first off, tell me about Octopus Ventures and also some background about yourself.
Sure. So Octopus Ventures is part of Octopus Group, which is the UK's leading VCT manager. We have investment teams all the way through from startup phase through to listed on AIM, and Octopus Ventures focuses on technology investments predominantly at that earlier stage into unquoted investments. We've been going since about 2007, and we're one of Europe's largest venture capital teams focused on technology. I joined Octopus in 2017, so about 4.5 years, and I've been the Apollo VCT fund manager for the last 2.5 years.
Okay, so tell me about Apollo.
Apollo is one of the largest VCTs in the market. It is a diversified fund with around 40 companies currently, and that number will grow over time. And what it aims to do for customers is to deliver a recurring dividend yield and the opportunity for capital growth. To do that, we invest in young, predominantly B2B, so business to business software companies. And we typically look to invest in about 10 or 12 new companies per year. We don't invest in startups, and that gives us a slightly different risk return profile to a conventional venture capital fund or investment pool. We look for companies which already have a product or a service in the market, and the capital that we inject is typically to accelerate the growth that they're already experiencing.
And your sort of better known cousin or brother, I guess, or sister is the Octopus Titan VCT. How do you differ from that?
Yeah, so lots of people will know Titan. It's a great fund. It's the biggest in the market. And Apollo is a really complementary fund to it. So one of the things I just mentioned, we don't invest in startups. So I think a couple of the key differences between Titan and Apollo doesn't invest in startups. It's not to say they're bad things, they're great things. But for Apollo, we want to come in at a slightly later stage once the companies are through that initial high risk kind of startup phase. And the other thing is predominantly around the ambitions of the companies. So Titan is explicitly looking for companies which have the capability to kick on and become worth over £1 billion in value. In Apollo, we'd love to get some of those, and I'm sure we will at some point over time, but actually we don't need that. Our investment model doesn't require that. We're very comfortable investing in companies which can look to dominate their niche, but they don't have to grow into enormous companies for us to make successful investments and deliver great returns for our customers.
And can you give me a few examples of companies you've recently invested in?
Yeah, absolutely. So we mainly focus on B2B software companies, and there's a great array of them across the UK. It's one of the most exciting parts of the UK company ecosystem. We'd been looking to invest in HR, human resources technology for a while, and we tracked a business called Sova Technology for a couple of years. What Sova does is it offers a software platform for end-to-end candidate assessment. So when large companies are looking to do large hiring programs and they want to make sure that their programs are in line with best practice, human resources technology used to be all about the nuts and bolts of pay slips and onboarding and things, but increasingly it's broader than that. It's about company culture, it's about diversity and inclusion, it's about employee wellness. And we backed a founder with a great reputation in the market, a background in sort of organizational psychology, and Sova's product enables these customers to run their recruitment whilst being in line with everything that is required in terms of diversity and inclusion, which is a great alignment of values actually with the way we approach things in Octopus.
And any other examples?
We invested in a business earlier this year called Perfect Ward. So that is a digital quality inspection software business into the healthcare and other care sectors. So this is replacing kind of manual processes with automated inspections of healthcare settings, whether that's hospital wards or other care settings. And that helps to drive up clinical quality, minimize errors, deliver better reporting to the decision makers and operators within those settings. Again, very knowledgeable, very passionate team, and doing something which I think is pretty obvious is beneficial to all of us and to the to the customers that they serve.
And what about some of the more mature companies you've got in the portfolio?
Yeah, we've done a big job in repositioning Apollo actually in the last few years, and so the vast majority of Apollo is now invested in younger companies. We do have a handful of the older companies, and they continue to perform well actually. We'll continue to exit them periodically because they will come to the end of their natural period of our investment, and they'll want their own kind of liquidity event, which usually is a sale of the company or further investment. The good thing about Apollo is we don't have we're not reliant on one or two companies to do fantastically well. We have a great model where actually the vast majority of our companies will do well. It's quite rare for us to lose money, touch wood of course, but it's quite rare for us to lose money on investments. And that is a differentiated model versus a lot of kind of conventional venture capital investment funds.
And are there any in particular that's doing well of those older investments?
It's really across the board actually, and that's one of the most pleasing things about our fund is it's really across the board that is delivering great returns for the fund and for the end investors.
And how's the pandemic affected you and the companies in the portfolio?
Yeah, I mean, look, obviously the pandemic has been a terrible thing for the world, for the country, for the economy, and for people. And firstly, I need to commend the entrepreneurs who run our companies for looking after their staff, their customers, and ultimately their businesses through what were in 2020 in particular extremely challenging times. The good news is Apollo came into that period with very, very low exposure to the kind of sectors that were heavily affected. So almost nothing in retail, almost nothing in leisure, and almost nothing in travel. And we'd already largely repositioned the portfolio towards technology. So yes, there were individual companies which had challenging times. Almost all of those have bounced back really well. And the figures speak for themselves. Actually, in the year to January 2021, which covered that COVID period, Apollo had a record year in terms of fund performance.
And why do companies come to you? What do you do for them?
Yeah, there are a lot of funders out there, a lot of capital in the market, a lot of choices that entrepreneurs have, and we respect that, and we embrace that. So we have to differentiate ourselves. We have to show that we're not just writing checks and that we can really help these companies. So the thing about Apollo is that the companies we invest in are usually at a similar stage in terms of the capital type of capital that they want, the uses of that capital, and the kind of problems and challenges and opportunities that they're facing. So there are three real pillars of what the capital tends to do that we inject into companies. One is geographic expansion, so that might be increasing domestically or it might be overseas. The second is increasing sales and marketing expenditure. So companies have often been had one or two people selling their products. They've got a great thing to tell the world, but they just don't have enough people out there meeting customers and making sales. And the last bit is incremental research and development into their products and making improvements. And so where we can help is Octopus has an in-house talent team who work full-time in helping portfolio companies to make great hires, make great senior hires in particular, because that's one of the biggest challenges that these companies face is access to really good quality management teams, really good quality talent, in a competitive market. So that's not easy, and we can help them overcome that. And then beyond that, we join the boards of all the companies that we invest in. We're not looking to tell these founders how to run the companies. That's their job, and that's what they're great at. That's what we're backing them to do. But we are able to help them. We use our experience in other companies to help them see problems coming down the track that we might be able to then navigate around. And indeed helping them with prioritization. There's often a huge amount of opportunity in front of them, and helping them decide what is the real thing to focus on and spend the majority of their time on.
And what about the performance of the VCT? How has it been doing?
Apollo's in a great place. Last year we had record performance in the fund. I think we'll have another good year, and I foresee good successes in the years to come. The fund aims to deliver 5% dividend yield. That's what we target. That's what the fund has always delivered. And I'm confident that we'll maintain that. So we've had a good number of exits in the year just gone, and that provides good coverage for upcoming dividends. And the nature of our investments, because we don't invest in startups, I think our hold periods would typically be 3 to 5 years rather than say 7 to 10 years, which some of the earlier stage funds can have. And that means there's always a number of companies coming up to their natural exit points. So I think we'll see ongoing exits coming from the portfolio, and I'm confident in being able to maintain the target dividends.
So let's just talk about some of the recent exits you've had.
Yeah, so we exited a business called HES Technology earlier this year. That's another software platform focused on remote workforce optimization. So if you've got hundreds of employees all working out in the field, in this instance, it's in the care sector, enabling better management of that workforce. It's an asset we'd invested in back in 2015, so we'd held it for about 6 years. And it's a great example of kind of patient capital, but it's also a good example of some of the things I talked about. So we helped it expand geographically, helped it improve its products, helped it access new opportunities, but also working with the founding team there to take it beyond a founder-led business to make a broader management team and ultimately build it into something that a large trade acquirer would want to purchase. Another example is a business called City Pantry, which we exited just before the pandemic. So that was a B2B corporate catering marketplace. So if you have a team meeting, or if you have external guests coming into your office, then having the same old sandwiches might be rather boring in this day and age. So that allows, through technology, that allows customers to be connected with a huge array of catering providers, ranging from some quite big high street well-known names down to your single site kind of street food vendor. So the end result is you can have more exciting meals. You can have them delivered to your office on time, hot, cold, whatever. That was going well in London, and we enabled it to grow its revenue significantly, grow its number of customers significantly, look at geographic expansion. And ultimately, that was another great example of preparing a business to be attractive to the right strategic acquirer. So we identified an opportunity quite early on, actually, in that investment. And there's quite an array of potential people who were interested in acquiring that. We identified in the end that Just Eat PLC, as they were at the time, a FTSE 100 listed company, they were looking for something for lunchtime trade to build out with their evening business. And it was a great strategic fit, and we were able to work with the company to arrange that exit.
And finally, Richard, there's lots of VCTs out there. Why should someone looking to invest this year invest with you?
Yeah, it's a great question. So investing with Octopus is the market leader. You're getting the market leading fund management business in the VCT space. Apollo is one of the largest funds in the market, so you get great diversification. And I think if you're an experienced VCT investor with holdings already, maybe you're in Titan already, Apollo is a great complementary product, slightly different risk return profile, slightly different stage of company. And if you're new to VCT investments altogether, which obviously a number of people will be, I think we offer a great entry point to VCT investing. We're not investing in startups, which are kind of the highest risk category, and so we're looking to generate a more consistent, less volatile return on each given deal. And lastly, it's very easy for me to say these words, but I backed it up. I've invested a substantial amount of my own money in the fund because I'm so passionate. I think it's a great product.
Richard Court, Octopus Ventures, thank you very much.
Thank you.